In January 2025, an OpenAI model triggered the largest single-day stock loss in U.S. market history. Silicon Valley immediately adopted a comforting narrative. They framed DeepSeek as a lab of resourceful geniuses, a team capable of out-engineering U.S. chip embargoes to reach the frontier of artificial intelligence. A 118-page transcript recently surfaced on the Chinese internet. Behind closed doors, founder Leang Wenfong spent 4 hours speaking to the investors who had just handed him 50 billion yuan. The transcript reveals a calculated strategy to seize control of the global AI industry. Leang described a process of hostile commoditization designed to break the established market leaders, a revelation so damaging it reportedly suspended his subsequent $71 billion funding round. This document offers a forensic blueprint of economic warfare, and Leang begins his pitch by bluntly admitting his most severe structural weakness. The scale of the Chinese tech sector operates under immense physical constraints. When investors asked about acquiring better researchers, Leang refused the premise. He stated clearly that talent is essentially a uniform pool. The only variable dictating model capability is compute. This chart shows the massive disparity in active parameters between American and Chinese frontier models. DeepSeek operates on 1/20th the compute, leaving them 2 years behind. Despite a 20 billion yuan budget, he cannot physically source the hardware. Training a leading model requires 50,000 Nvidia GPUs. Because he cannot overcome Silicon Valley's raw hardware advantage in the short term, Leang is executing a strategy to bleed them out on price. DeepSeek prices its API using a strict arithmetic formula. They buy a batch of servers off the market, calculate the cost, and set the usage price so the hardware pays for itself in exactly 10 months. By aggressively slashing their application programming interface prices, they intentionally trigger a race to the bottom that destroys competitor profits. The transcript details his core business philosophy. Those whose ambition is to take a higher profit margin will inevitably lose market share to those whose ambition is to take less. Leang acknowledged that market demand is inelastic. He could double the price and still maintain his user base, but he chooses to leave that money on the table. The objective is total revenue capture, ignoring windfall profits entirely. By intentionally suppressing industry margins, DeepSeek ensures no American company can accumulate the cash reserves required to form a monopoly. This margin destruction sets up his secondary weapon, open-source software. Releasing models for free is a calculated maneuver. Leang projects that AI will eventually represent 10% of human GDP, making the sector far too massive for any single closed-source company to control. The effect in China was immediate. After DeepSeek released its strongest models openly, massive competitors like ByteDance and Tencent were forced to react, multiplying their own open-source outputs nearly tenfold. American labs like Anthropic operate behind a walled garden, keeping their most powerful models entirely closed behind an API paywall. Leang even offered to help domestic rivals reproduce his lab's results. By accelerating his competitors, he actively accelerates the commoditization of the entire technology. DeepSeek forced the industry to adopt its terms for software distribution, yet controlling the code yields no long-term advantage if they cannot break the American monopoly on the physical silicon. For 15 years, Nvidia maintained a monopoly through its CUDA software library. Leang asserts that this moat is rapidly eroding because AI can now generate its own code ecosystem, bypassing the need for legacy libraries. This leads to his core hardware gamble. He claims that Huawei's domestic supernode architecture can fully replace Nvidia's highest-tier chips in both price and performance. He provided a highly specific exchange rate to his investors. It currently requires 4 Huawei cards, plus 2 years of added latency, to match the output of a single Nvidia card. Despite this significant physical inferiority, large Chinese technology companies are purchasing hundreds of thousands of these domestic chips to build out their server farms. Staking the company's future on unproven domestic hardware forces Leang to make one testable prediction, and it carries a definitive deadline for the West. While Leang spent 4 hours preaching market restraint and reduced profit margins to his investors, he structured DeepSeek to grant himself absolute control, issuing 0 board seats and no voting rights to outside money. Furthermore, the lab is not a nonprofit foundation. It is entirely owned by a quantitative hedge fund managing over 70 billion yuan. This financial structure has made Leang the richest creator of AI models alive today. With a net worth of $36 billion, he far surpasses the wealth of his American peers. The ultimate deadline is set. Within 12 months, the viability of an entirely isolated, self-sustaining technological ecosystem will be proven. If Chinese silicon reaches price and performance parity with Nvidia, the physical barrier of the US embargo dissolves. The most cost-effective frontier models will no longer depend on Western supply chains, effectively neutralizing the current export control regime. The scrappy underdog narrative has been replaced by an aggressive economic reality. The countdown on DeepSeek's final objective is already moving towards its deadline.